Welcome to Multifamily Investing with Bob Biggins. I'm Bob Biggins, and I am pleased to announce Ken Gee. He's the founder and managing member of KRI Formula Partner, a real estate private equity investor firm. He's got more than 26 years of real estate banking, private equity, and real estate investing experience. And throughout his career, he's been involved in transactions valued at more than 2 billion with a B, which includes acquisition management and financing through various multifamily real estate projects. So without further ado, Ken, hello and welcome to my channel.
Hello, thanks for having me. I'm glad to be here. Looking forward to it.
Thank you very much. Your bio is extremely impressive. Can you give the audience a little more background onto your private, your personal and professional background?
Yeah, so I'll give you the Cliff Notes version. So I grew up in Toledo, Ohio, got my undergrad at University of Toledo, moved to Cleveland, became a commercial lender while I went to school at night at Case Western Reserve University. So I spent 5 years as a commercial lender. So my master's degree prepared me to be a CPA. So I did that, passed the CPA exam, went to work for Deloitte, spent a total of 7 years there on the tax side. So I did tons of M&A work, due diligence, transaction planning, all if there's fun stuff CPAs can do, I got to do it.
Mhm.
Thankfully, I did some compliance stuff too early on, but it was when I was at Deloitte that everything changed for me. You got to rewind the clock like a long time now. It's been even 28 years, even more than that. So mid 90s, late 90s. I had two kids. My daughter was an infant. I used to do her 3 o'clock in the morning feeding. So, I mean, I need you to think I'm at Deloitte working like a dog because that's what
Right,
CPAs did.
right.
They still do. I don't. And every 3 a.m., mom needed a break. So it was awesome. It was great bonding time. If you're a parent, you just can't beat that. Until I realized, wait a minute, Ken, and this is the realization that happened to me. It was really, really enjoyable, really quality time until I realized that 3 o'clock in the morning was the only time I got with my brand new daughter, and that was ridiculous. I started to really realize, man, I did everything right. I went to school, got good grades. I did exactly what my parents said, got a great job. I was supposed to be living large. And I just realized my family was going to grow up without me because I had no control over my time, no control over how much money I made, no control over anything. And that was, now what I didn't tell you was the 5 years I was at the bank, all my customers did real estate. And I know they made a lot of money because I got to see their financials. Then I
Right.
went to Deloitte, the Cleveland office. It's the biggest real estate tax practice probably in the firm out of the Cleveland office. So
Okay.
now here I am surrounded by more people. These people making insane amounts of money. Like if you knew who our clients were, you would know their names. I mean, they're that household name.
Wow.
And so I thought, man, I got to figure this real estate thing out because it's working for them. I spent a year and a half trying to figure it out. There was no Bob Biggins back then trying to teach you how to do this stuff.
Right, right. I
I watched,
remember.
yeah, I watched Carlton Sheets,
So did I. So
no
did
down
I.
payment videos. I did those.
Yes,
And
yes, so did I.
then spent a year and a half going to apartment association meetings, just some of the most boring stuff on planet Earth. But I was finally able to buy three small apartment buildings, a 28, 24, 22 unit, sold them 3 years later, and made $500,000 and realized, wow,
Uh-huh.
this works. Like I can actually make this happen. So I hung around for Deloitte for another year and a half just because I'm a chicken. I wanted to make sure everything was cool. And now, I mean, I've been doing real estate ever since. So
And
that's how we
that
got started. My
it's
family kind of drove me into this.
right, right. So you've been full time in it for the 24 years.
Yeah.
Yeah.
Well, yeah,
Well,
yes,
full
yes,
time.
yep,
Full time.
yep,
Out of
100%.
Deloitte for 24 years.
Yeah. Yeah, I left
Gotcha.
Deloitte in '01. So that's 25 years. Yep.
Yeah, yeah, yeah. 20, oh yeah, 25 years. 25
Yeah.
years now.
Yeah.
Right. So yeah, time flies. But that is really impressive that you worked with even in Deloitte with all the high net worth individuals and their tax
Yeah.
preparation. I bet the things you saw on that on those returns would just shake
Hundreds
most
of
folks.
millions of dollars. Yes, insane
Yes,
amounts of money.
yes,
Yes.
yes, unbelievable. So you were used to thinking about those big numbers. I mean, that wasn't super
Yeah.
foreign to you for what you do now.
Well,
You've seen them on paper and like people say, add a zero to some of the deals you do. You saw that.
I
You saw what's
did, but
possible.
look, people misunderstand CPAs. I mean, what somebody else is doing is different than doing it yourself.
Oh,
It
absolutely.
is it is completely different. It just it is a bigger stretch than most people realize. They're like, "Oh, you've been around this forever. You know big." Yeah, but wait a minute. But I hadn't done it myself. Until you do it
Gotcha.
yourself and it's you signing on that loan and it's
Right.
you signing on those that purchase agreement is it completely changes everything.
Certainly, certainly. Um, Interest rates have stabilized somewhat, but refinance and new acquisitions still face challenges. Is
Yeah.
KRI Partners adapting its underwriting and capital stack strategies? Are you guys staying more consistent, or what is your strategy for funding and that type of thing?
Yeah, so I mean, like a lot of people that grow up in this business, so our first 10 years, I'll just give you the story. We just did me and a partner, and we did our own money and we highly leveraged. And our if you look at our track record, it's on our website, you can see the progression. Then we started syndicating. So that means we go find the property, lock it up, then try to raise money in that short amount of time. That's probably a reason I lost a lot of hair, okay? Because that's a stressful thing to do. And we did this when we started in Florida. So 10 years ago, 10 years in, I decided, man, we did okay in Cleveland, but what if we actually went to a place where everybody wanted to live? And that's what drove us to Florida. And so spent a whole lot of time, did some syndications there. But man, in Florida, I mean, there's a lot of people that want to buy in Florida, a lot. Like it's not uncommon to go up against 20, 30 people that are offering for the
Wow.
same deal. And so as a syndicator, how do you differentiate yourself? Price. That's
Right,
the only way you can do it, right?
right,
Because you haven't raised the money yet. So a number of years ago, I said, man, this is too hard. I got to change this. I was already familiar with the private equity model. The private equity model goes and raises the money, then uses that money to buy the deal.
right.
So that's what we need to do. That's what we need to do. We are now on fund number six. So we operate blind pool funds. We raise the money in advance. And let me tell you, I did it because I wanted to have an advantage over everybody else. I didn't want to be just another syndicator. I promise I raised the money, right? No, now
Right,
we already did raise the money, Mr. Broker.
right.
You need to give us the deal.
It's right here.
And it worked very, very well. It's harder to raise money that way. You have to have a track record because people
Hmm.
don't know who you are.
Hmm.
But now, fast forward, we're on fund number six, right? As I record this, we're a little over 10 million in fund six and continuing to
Wow.
grow fund six. And when you call the brokers, I got 10 million in the bank, I need a deal. They help you get deals. It is a completely different scenario. So we get better deals, we get deals we wouldn't have gotten before. Everything's completely different now that we have the money. I mean, it just makes sense, right? If you have money up front, they don't have to, sellers don't have to worry about whether or not you can raise the money. You already did. It's done, right?
Right.
I can close, and we're easy to deal with. So that whole business model is working, especially in a competitive market like Florida.
Great. With six funds like that, so you have 10 million in fund number six.
So far, yeah, we'll probably end it between 15 to 20. We like 15 to 20 million dollars in each fund.
Okay. Is each one of your funds one deal, or do you put multiple deals within the same fund?
Yeah, it depends. So we prefer our target is to have two deals in each fund. So
Okay.
maybe we have 15 million, maybe we deploy eight on deal number one, leave seven for the next one, right? So we always have money in the bank.
Gotcha.
So after we buy deal number one in Fund Six, we'll have some extra money in Fund Six. Fund Seven will be the next place that we raise for. So now Fund Six and Fund Seven will be partners. Then Fund Seven and Fund Eight will be partners. So we always have two deals in each fund. That's our objective because it solves a lot of problems. There's always money in the bank. We always have a place for new investors because we're always coming across new investors, and it gives them a little bit of diversification.
What's your long-term plan? I mean,
Rinse and
fund
repeat.
seven, fund eight, fund 10,
10,
fund.
Fund 20. Yeah.
You're right. Yeah. Keep on.
Yeah.
You're just enjoying it. Just, just,
You're
uh,
supposed to enjoy life, right? It's
absolutely.
fun. It's
Absolutely.
fun.
That's great. That's great. For credit investors considering their first syndication, what are your top three red flags for people who want to be maybe a passive investor or
Yeah, yeah,
what do you see with organizations that are maybe not as straightforward as yours?
yeah. So you mean if you're a passive investor, how do you vet sponsors? Or do you mean as a new sponsor, how do you set yourself up for success? Which one of those two are we going for?
Um, well, let's try that. If you're a passive investor, how would you spot red flags
Yeah,
if you're
yeah,
looking to invest?
yeah. So I've developed my four rules. Um, let me just tell you what they are. The first
Sure.
rule, if you're vetting a sponsor, is number one, you got to make sure they have experience. And I know you're like, well, of course, Ken, but here's why that matters. We're investing in businesses. They just happen to be apartment buildings. They have all the same risks that any business has: revenue, employees,
Right.
insurance, I mean, everything's the same. We don't know what's coming next. We didn't know COVID was coming. We didn't know hyperinflation was coming. We didn't know that interest rates were going to go up. We didn't, I mean, you don't know what's going to be next, right? We just don't know. So you need a management team that is able to run that business that has some experience behind them. That's the key. Because I promise you, as well as you can think, oh, I'm going to plan out the future, you don't know what's going to happen tomorrow, let
Right.
alone 6 months or 12 months. You've got to have that management team have experience. Rule number two, they got to have a track record. I know you're like, duh, Ken, this isn't rocket science. It's not, but I see people break these rules all the time. I promise you.
Sure.
What's important about the track record? Anybody can buy a deal. You have to have a track record where you can prove that you've gone full cycle with a deal. So you bought it, you operated it, you sold it, you made money for your investors, right? That's full cycle. That's the track record that matters because now you've proven that they can buy a deal, turn it, make money on it, and their investors now they have a real track record with
Right.
real results. Like we've done 20 deals, gone full cycle on 14, right?
Wow.
And you can go look at that, right?
Hmm.
Rule number three, so that's rule number two. Rule number three is transparency. I'm a complete freak about this. You, I believe that if you give me 100,000 of your money, which is our minimum investment, you deserve transparency. You don't deserve me blocking, so you don't really know what's going on the ground. We
Right.
encourage our investors to visit our properties. Our managers will walk them around anytime they want. We encourage our investors to shop the property, call them, do whatever they want. We do monthly webinars. We call it our Real Deal webinar, Real Deal Investor Update, where I
Okay.
talk about this is how much leasing traffic, this is our occupancy, this is our delinquency, this is our insurance cost. I mean, like talk about whatever's relevant, right? So it's an open forum. Usually we get 200 to 300 people on them, but it gives
Nice.
you the opportunity for an investor or a potential investor to ask me questions directly. I think that level of transparency is important. In addition, if you look on our website, our whole track record's there. We hired a third party company to vet the entire thing. Like I had to send them, imagine 28 years of tax returns, settlement statements,
Oh
purchase. I
yeah.
mean, it was horrible, right? But it is important if you give me your money, you should know that the stuff I'm showing you has actually been looked at, right? I didn't just make it up and throw it on a website, okay?
Right.
That's rule number three, transparency. And the last one, rule number four, is you've got to make sure that they're putting you as the investor first. You've got to have perfect alignment here between the sponsor's goals and the investor's goals, right? I never worry about how much money I'm going to make in a deal because I've aligned everything perfect. All I need to do is worry about the investors and I'll be fine,
Right.
right? And so what does that mean? Well, it's a little harder for some people. You got to read the PPM, the operating agreement. You got to figure out what the fee structure is and all that kind of stuff. So how to figure that out? You want to make sure that the fees are not excessive. Like our
Right.
fees are 1% across the board. I mean, nobody has ever complained about our fees. It's
Right.
lower than, as low as anybody's. All
Hmm.
right. Second, what's the split? Right? Is it 50-50? Is it some complicated waterfall structure that, I mean, you got to spend 2 hours just trying to figure out how much money you make, right?
Right.
That's
Right.
silly to do all that. I don't think that's necessary, or you should do it. Third is if there's a capital event on that, you don't want to get kicked out of the deal.
Right.
You should
Don't want to
stay in because I
maintain ownership.
believe that if you and me take the risk on day one,
Hmm.
you should be there on the final day getting paid just like me, right? So those four rules, if you follow them, they're not going to be perfect, right? But I can tell you that when we talk to people that have invested in deals that didn't go so well, probably one, if not two, at least of those rules have been broken. And so that's why I want you to focus on those four things. I'm just trying to help you mitigate the risk of getting into a bad situation. And when you look at them, they're kind of common sense, but people forget this, if somebody's never sold a deal and made money, okay, well,
Right,
they
right.
haven't done it. You're going to hopefully be the first, right? And you have to
It's
be
nice
ready.
and succinct. Your four rules, nice and succinct. Boom, 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 boom. So that they may be somewhat common sense to people in the industry, but they're very pointed and noteworthy. Very
Yeah,
succinct.
yeah,
You built yourself wealth for you and your investors, um, prioritizing family time. What advice would you give to like busy professionals and people like that who are maybe grinding out the 9 to 5 and they would like to get into real estate? What kind of
yeah.
advice would you give to them?
Yeah, so you got to get motivated. The first thing you need to do is really understand how much money you can make in this business. And we do a monthly workshop that's free that I help people understand that because the reality of it is you're going to have to carve out some time to learn this business. I mean, it's a business. It's not
Yeah.
hard, but you got to spend a minute and figure it
Hmm.
out. Because if you don't know the business, in my opinion, you should never ask anybody else to invest in it. I mean, that's just ridiculous to do that, but people try to do it. So you just got to manage your time. Back when I was at Deloitte, I mean, I worked a lot, I had a young family. You just got to carve the time out. And you have that forces you to be disciplined, but you have to have that motivation to want to do that because it's hard, right? I mean, it's a
It is.
grind in the beginning. It is. And everything that you do the first time is going to take you 10 times longer than it takes me because I
Right.
know how to do it, right? You're trying to figure it out. So
Right.
I think the number one thing you got to do is understand why you're doing it. I didn't want to miss my daughter's basketball games, their
Hmm.
school plays, their my son's baseball. I didn't want to miss any of that stuff, right? I mean, that was my huge motivator. And that always kept me focused. Like, okay, do I want to, spend Saturday morning working on real estate? Yeah, I do. Yes, I do. Especially after
Absolutely.
you sold those three properties that made 500,000. I'm like, holy crap, I $500,000 in my bank account.
Right.
That just I just couldn't believe it, right? But all you have to do is see that happen one time, and then you're really motivated. So it's the motivation that makes you really stay disciplined and carve out the time that it takes to get to learn the business. And that's what you actually have to do. Because if you don't know any business, you shouldn't do a business you don't know anything about. And there's no way you should take somebody else's money if you don't have a clue.
Oh, absolutely. Keep your eye on the prize.
Exactly.
Yep. Um, Keeping time in mind here, finally, what's next for Ken Gee for KRI Partners? Any new markets other than Florida?
Yeah.
What's the crystal ball showing, Ken?
Yeah, we like Texas. We like the Carolinas. We're just really slow. We're very careful. We're going to spend time on the ground understanding that market before we go in there
Hmm.
for the very reasons that we just talked about, right? People
Right.
invest with us. They trust me to do all the necessary work and make sure that it's good before I go in. So that's what's next, right? We're on Fund 6. We're just going to continue to rinse and repeat. We're going to stay in our lane.
Hmm.
We're not going to wander off into office and retail and everything. That's not what we do. We know what we do. We do it really well. Like there's no reason to reinvent the wheel. Just keep getting better at it and better at it. And that's the future for us.
Beautiful, beautiful. Um, was there, would you like to provide any contact information or anything like that so that the viewers can reach out to you if they'd like to learn more about KRI Partners or
Yeah.
what you do or what you're teaching?
Yeah. So just it's easy. Go to kripartners.com. That's kripartners.com. Or you can call or text our team 216-290-1707.
Okay.
But here's what's going to happen. When you go there or you talk to our team, we're not here to sell you anything, right? What is important is we help people create wealth through real estate. We got to understand you. What are you trying to do? What's your world look like? Some people should be on the passive side and right, just write a check to us and let us do all the work. Some people want to do their own deals. Nothing wrong with that. We show them exactly what we do. Like our underwriting spreadsheet is the same exact spreadsheet in our course that I use. It's no different, right? And that's
Okay.
the transparency part, right? Every little thing that I do in our business, that we do in our business, we teach you to do. So it doesn't matter which side of that equation you want to be on. Most people actually do both because it just makes sense. But that's what's going to happen when you come in. We just got to figure out, can we help you? Is this something you really want to do? And then if we can't help you, that's fine. At least you have some more clarity about what direction you should go.
Well, Ken, I appreciate your time. I really know that you're a busy gentleman and that you carved out a few minutes to spend with my channel, and I appreciate it. And so this would be Multifamily Investing with Bob Biggins, signing out.
Thanks.